kick off here. Good afternoon, Paul Weibel. I'm the Chief Executive Officer with 5E Advanced Materials. Want to give an overview of our project we have here in California. But first, I want to thank Noble for a great conference over the last 2 days. A lot of really good meetings, and it's great to get the exposure. 5E has a California-based project. We're located about halfway in between Las Vegas and LA, right off of Interstate 40, about 30 miles east of Barstow. We have a very large colemanite deposit, which is a calcium-based boron mineral, which has about 13.9 million tons of boric acid at a full production level. Today, we have a small-scale facility. You can kind of see it in the background there, where we're producing 1 ton a day of boric acid that's being used to drive our customer qualification process. We're in the process of going through our pre-feed engineering to optimize our CapEx and our OpEx for commercial scale. All major mining permits are in place up to 90,000 tons a year, which we define as our first phase of commercial production. And this past fall, we received a letter of support, which is basically the invitation for diligence for a project debt facility up to $285 million from the U.S. Export-Import Bank. And as we operate that pilot plant, we're working through the customer qualification, and we'll put offtake agreements in place to really underpin the debt financing that we'll go and target with XM. Who's our team here? Myself, CEO. Lonnie Bailey was at Albemarle Silver Peak Mine. He runs our site. Josh was out of oil and gas with Oasis. Mark Zamak is our VP of Commercial Products. The borax market is very much an oligopoly. Mark spent 20 years at US Borax, was the North American sales manager, recently joined the company, and has been driving our efforts to put offtake agreements in place. And Rod McLean seasoned veteran, has built projects and is overseeing our FEL2 and feed engineering efforts. Just a little bit of history on the resource. So we have 6 parcels of property, sizable acreage. In the state of California, mineral rights are conveyed with the real property unless they're carved out. 5 of the 6 parcels, and which is in our permitted zone, we have all the mineral rights, and then we're surrounded by BLM land. The deposit was discovered back in the 60s by Duvall and Pennzoil. That led to a very elaborate exploration program throughout the 60s and 70s, and the land acquisition program and pilot plant operations that occurred in the 80s, where about 500 tons of boric acid was produced. That led to the big permitting initiative that occurred in the 90s, where in 1994 we got our record of decision with the US BLM and cleared NEPA, and our state mining and reclamation permit with the state of California, which cleared the CEQA process. Fast forward, project was pretty much in care and maintenance during the 90s and 2000s, and a group of investors out of Australia did a share exchange, IPO'd on the ASX, and we re-domiciled to NASDAQ in March of 2022. In 2020, that's when we got our final mining permit, which was a underground injection control permit with US EPA. We got our final mining clearance last November and started mining operations in January of last year. So all major permits to operate are in place, operating today, and we have that high-quality colemanite resource. As you can see, there's a map there. That's the full deposit. All those little spots are the drilling exploration holes that occurred since the 60s, and we're approximately 2 miles off of Interstate 40, and the gray shaded area is our EIS-EIR boundary, which the top kind of northeast corner there sits 350 feet from the Mojave pipeline, which goes down to the Permian, which is ultimately how we will power our project at commercial scale. From a process perspective, our mining's a little bit different. We're in situ leaching, so that deposit sits 1,300 to 1,500 feet below ground surface. It is a highly concentrated deposit of calcium and boron, and so we'll inject a very dilute, weak 5% hydrochloric acid solution underground that we call a cycle, essentially our injection, our residence time that chemicals will react, and all minerals become aqueous solution, and then our recovery cycle. We'll pull that solution to surface. Once we're at surface, we'll crystallize through a chilled crystallization. Our essentially, we call that our head grade, i.e. how much boron is in solution. We're seeing after a good year of mining data, average head grade is about 6 to 7%, which is very strong. Because that's so strong, we're able to design at a commercial scale chilled crystallization, which is essentially an optimal way to drop out, crystallize the boron, and filter to bagging to super sacks. So it's a little bit different. And then what happens is that waste stream, which then includes calcium, will make a calcium chloride, and then remaining feedstock goes back down hole. So it's a closed loop process and very different than a traditional open pit mining where you have a massive imprint in the ground. From a decarbonization process, much more cleaner, more efficient than your traditional hard rock. No arsenic in our process, so clean and no hazardous waste. Just kind of summary of where we are today. We have our small scale facility. It's fully operational. About 2 weeks ago, we sold our first truckload of super sacks, which is 22, to the local a manufacturer in insulation in the Southwest region. We're a ton a day. Those sales of super sacks can cover our variable costs, but the facility is very much a pilot plant in that it's all the data we're getting, the do's and the don'ts is kind of rolling right into our pre-feed engineering program as we look to design a much larger commercial facility. As I mentioned, head grades are very good, 6% and more recently closer to 14,000 ppms of boron. And kind of next phase of operational improvements will be utilizing directional wells. So we have 4 injection recovery wells today. The pay zone is about 200 feet in thickness, between that 13 and 1,500 feet below ground surface. And so we have 4 vertical wells. That's approximately 800 feet of pay zone. Where we need to take this is essentially directional sidetracks and horizontal wells, and leveraging techniques from oil and gas, where you do have a downward gradient and you'll start at the downside, go a deep heel to toe, and leverage basically the playbook of what oil and gas has really perfected in this country, and you get that much more bang for your buck on your mining techniques. Kind of all of this kind of segues into leading up to getting ready to diligence and move forward with XM for project finance. We're working on that optimized CapEx and OpEx. Utilizing calcium chloride as our byproduct versus gypsum was a recent strategic initiative we decided, as that gives us a better cash cost, saves us on CapEx, and so we continue to optimize there. All the data we've gotten from that small scale facility continues to go into our pre-feed engineering program, which will be wrapped up here targeting in the March-April timeframe. And then that goes and ties into any of the product we're producing is really going to, well, qualification for customers or any incremental sales that we can get into the market. And so as we think about that, we're gonna, for the XM, we need those bankable offtakes. And so we need to get those in place here that are gonna really underpin the debt. It'll either be a combination of, to start, HOAs, which are heads of agreements, are kind of the non-binding, or full bankable offtakes where customers are committed and lock in essentially a floor structure take or pay offtake. This is a little bit more detail on our flow sheet. As you can see, it's very much a closed loop process where you're dropping out different products in the process. You go down on your well bores, down to your colemanite, come back up above, which will crystallize. You'll also drop out sodium, magnesium, metals waste. And we do have a lithium chloride stream. We have about 45 ppms that will translate to about 250 tons a year of lithium carbonate. It's not much, but it's a byproduct we do plan to monetize. You'll then add additional HCl, you make up recovery, and back downhole you go. So it's actually a simplified process, and it works. And what we're doing today. Kind of as we think about the future and kind of going after that XM and the $285 million letter of support we had, you can see in the green we're pilot plant operations, currently at a ton a day. We can go more than that, but it kind of from our liquidity profile and also maintaining customer specifications, that's where the sweet spot is. We will continue to operate on that, utilize our production to leverage and get more experience on the mining side, where we'll go into the directional drilling in the spring here. And this all kind of builds into our commercial phase one, which is 90,000 tons a year of boric acid. It'll be 180 to 200,000 tons a year of 38% calcium chloride in solution. And what does this all cost? It's a 300 to 350 million total capital, including your inside battery limits and outside battery limits. So the question is where does that financing come from? And that's where the XM steps in. The letter of support was for up to 285 million, tenure up to 15 years, and obviously that comes at friendly interest rates. My first meeting will be with XM in January and kind of set the stage on what does the diligence program look like, and how do we run the most efficient process possible. We do have additional phases where we would add, which would be an incremental 180,000 tons for total 270,000 tons a year of boric acid. Focus today is very much though phase one on the commercial side. Just from a pricing perspective, spot price today on boric acid ranges about 1,100 to 1,200 a ton. You're talking about on 90,000 tons, 112 million in revenue potential, about another $20 million of byproduct, and then you're looking at your cash costs coming in around the low 600s. So that's where we want to target the business, and as we kind of engage in customer discussions for these offtakes, we've really found customers are quite refreshed because the boron market's an oligopoly, and people are very inclined to want to see de-risk supply and see that third party come online. So it's been quite encouraging. Kind of just segueing, what are the catalysts? What are we going to be driving towards over the next 12 months here? As obviously we're in this optimization phase today, driving to an update of our technical report and a publish of the PFS this spring. On the back of that, there'll be offtake agreements that we look to put in place. We're confident we can go above the 90,000 tons. If you think about that, that's probably 3 to 4% of global demand. So we can be highly selective, and we can really strategize from a customer perspective, a segmentation strategy. We'll look to initially put some of that product into the US and then segue over to Asia, where there's specialty glass manufacturing. And we can kind of target customers that give 5E the highest net back price. From there, once we go and finish our pre-feed engineering, it's really a focus on feed, getting to that BFS, and really going through the diligence of the project finance. Leveraging those offtake agreements we have in place to give underwriters comfort that there's good bankable customers that are going to pay their bills and underpin the debt. Looking to put raw material supply agreements in place and really firm up, hey, where's the power coming from? What are our outside battery limits looking like? And how do we get cogen running our facility? And then all that basically tees up with a debt commitment, and you're really off to the races on the detailed engineering, starting with, and in construction with the civil, and you're looking at this project coming online at late 2027, early 2028. That's it for kind of the presentation. Happy to facilitate any questions you might have.
I missed maybe 5 minutes of your presentation. So are you the company's vertical integration
Yeah, so it's interesting. A lot of the other boron companies will produce a concentrate, and then a lot of that gets shipped off to China or is further processed in other countries. And so, uh, because our process is aqueous in nature, we actually produce the first boron derivative, which is boric acid. So from there, you do have the advantage to vertically integrate and spin off into various derivatives. The easiest one is actually to go from boric acid to boric oxide, where so if you think from a chemical perspective, boric acid is H3BO3. And so you really just need to further dry and heat that product to go to B2O3. And the H and the O's, the H2O's essentially evaporate. And so you're seeing what is spot of $1,100 to $1,200 a ton boric acid, boric oxide's like 4,000 a ton. So you can use that vertical integration from going mine to like further derivatives to really command a higher premium and value in use. So that's like that's the goal is kind of get into different specialties and derivatives, but the focus is a lot today very much on let's get the feedstock.
So it's a commodity, right? Eventually. And what's,
I would challenge that a bit because it's very much like it has traditionally been and been priced like a commodity at $700-800 per ton. But if you look at so it's a very opaque market in that 60% of global supply is controlled by the Turks and basically Eddie Modern, which is a state-owned mining organization, and then you have Rio Tinto's U.S. Borax. The Turks don't report anything while Borax does, but relative to Rio's overall financials, the business is very small compared to Rio's iron ore businesses. But when they report their segment information, their Borax entity revenue is up 40% over the last 2 years and flat to declining production. So that would kind of argue that it's not necessarily a commodity, and it's actually all contract driven. And as contracts roll off after 3 to 5 years and get reset, they're no longer just trading like a straight commodity.
yeah, you are talking about the off-taker issues on a long-term basis.
Correct.
And how do you price that when you drive this fluctuation of the price?
How will we price it?
Yeah, how you drive, navigate through this, because you are talking about long-term contract, right?
Yeah, we'll look to do off-takes kind of starting in that 3 to 5 year range. There won't be many 5, it'll be probably 3. And I think it'll be subject to market pricing, but ultimately the customer's got to realize that if they want to break the oligopoly up and they want 5E and additional supply to come online and the market continues to be tight, there's got to be some flex in there. And ultimately, we need to have floors in our offtakes that are going to ensure we get debt financing and clear the underwriters. So there's going to have to be some flex in there with a firm floor. And, we're not going to compete we're 90,000 tons a year of boric acid out of phase 1, where Rio is 500,000 tons of oxide, which is the equivalent of about 1 million tons a year of boric acid. So we're going to be really selective on that 90,000 tons and go with customers that really value securing up the supply chain.
So since you are made in USA, will you be able to drive some premium comparing to the other market?
The premium is going to come from the US as well as Asia, where you have the specialty glass manufacturing. Essentially, there's about 2 pennies of boron in my iPhone. Whether it's 4 pennies, 5 pennies, 6 pennies, it's still going to be an $1,100 iPhone. So there is value in use there.
Thank you.
Yep.
What's the cap table look like today, and where's it heading as far as the book build process for you in your?
Yeah, so we've been financed with senior convertible notes. Those notes, there's 82 million in par. That's definitely created a bit of an overhang on the stock. Lenders continue to, it's not really a loan to own. That's not what the lenders want. They continue to be supportive and defer covenants, and they've topped up with notes in addition to we have raised a little bit of equity here and there. So I think if you think from a cash flow perspective, we're probably 17 million out from FID. You know, I think we continue to talk to lenders on and manage them on a weekly, bi-weekly basis. Both lenders have representatives on our board, so there's good progress. And it's, yep. And so I think the goal is to get to the debt. The stock's been a little bit like my golf game. I think I'll hit from this fairway, maybe that fairway, but we'll putt for both eventually. And but I think like this is a project that's going to get built. Like the permits are there. We're seeing it as we go out for customers with offtake. There's an appetite to want to engage with the company, and if you put those offtake agreements in place, you kick off your diligence, you have an economic capex, and you can demonstrate on that you're going to have a project that clears a good 20% IRR on a pre-levered basis. Like there's no reason with this jurisdiction, like you're not in some random third world country. You're literally 300 feet from the Mojave pipeline. Like this is a project that's going to come online.
Maybe I missed it in the beginning of the presentation. Can you expand a little bit on your team?
Yeah. So I've been with the company for 3.5 years. So I was there when we were ASX listed, and I was very much pushing a lot of papers as the CFO at the time, getting the company through that going public process. Lonnie came in as our plant manager. He's now our VP of operations. He spent lots of time. He was at Albemarle's Silver Peak mine and is like very good from getting like operations, best practices running the plant. Josh was our interim chief accounting officer. When I got moved into the CEO, he was a natural fit to just slide into my previous role as CFO. He was also a PwC alum, was at Cord and Oasis Oil and Gas. Mark was 20 years at Rio Tinto, their North American sales manager. He came on board on October 1, like literally from day one, just basically pulled out his Rolodex and dusted it off, and like in short order, like there'll be 90,000 tons of offtake agreements in place. It's been pretty refreshing. And then Rod, out of the EPC world at Jacobs and Fortescue, and has built projects globally all over the world.
In the slide where you go through the flow chart, you mentioned that there's one of the steps or stages that you're monetizing. Is that a focus to monetize multiple stages, or?
Yeah, so we how you get the cash cost down is byproducts, right? So we did we took a ton of time to look at you have calcium. Do you want to make gypsum that sells for about $12 to $20 a ton? Doesn't cost a lot. Or do you want to go to calcium chloride, which the market studies have tell $90 to $100 a ton, and there's a trade-off between more acid utilization and consumption versus buying HCl over sulfuric. So we also have magnesium, which is a decent amount of those metals. So we got to get to a hydroxide, and there's decent margin in it that can help pull our cash costs down.
With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then ChannelCheck truly is your tree. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series luncheons, and to be part of the preeminent annual Small and Microcap Investor Conference, NobleCon. And here's the best news. Since ChannelCheck is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why ChannelCheck is North America's leading source of research on the companies that just may change the world.